Hey Ashley, how's it going?
Hey, good. Good,
Good.
good. Starting to warm up.
I know, I know. Oh my gosh, it was so cold. I was kind of like excited that I missed a lot of the cold because I was in Arizona. For a hot second, all work,
Right.
literally 8:30 to past 6:30 every night at a conference. No time for any fun, but that's okay because it was a great conference. So,
Well,
um,
good. Yeah, it was
yeah,
frigid.
yeah,
Frigid here. It was,
yeah.
yeah. Birkin would
That's
not go on her walks.
Really? I was going to
No.
ask you how that went. Because I heard it was freezing.
Yeah, it was wicked cold.
Yeah. Did you do any other fun things d during the crazy cold weather?
I put together like a big puzzle because I'm a
Mhm.
real big nerd.
No, that's fun. I love doing puzzles.
I know. Oh my God, puzzled,
Yeah.
ate lots of food, read a lot of books. So
Yeah.
no, I didn't do anything exciting, but it was fun.
Yeah. Well,
Relaxing.
that's cool. I mean, that's the way to go.
Yeah.
Yeah,
Yeah.
for sure. So, okay, today we are going to talk about some fun things. We're going to talk about 2-1 buy downs, what's going on in the market, and is it a good time to buy or refinance? So we definitely want to jump in. Again, it's Carrie with Carrie Careco Real Estate, and I have the fabulous Ashley McKenzie Sharpe with Highland Mortgage here today. And I guess we should just jump on in and get going. So,
Do it.
can you give me an overview of where mortgage rates stand as of today and what trends are you seeing?
So rates right now are probably in the mid to high sixes,
Yeah.
maybe low sevens. They're starting to slide down a little bit.
Hmm.
But I'm not sure with the report coming out tomorrow what that's going to do to
Oh,
it, but we'll see. We'll see.
yeah.
The Fed held, they didn't,
That's what I
lower.
can.
They didn't
Yeah.
make any cuts. I still think they're going to.
Yeah.
They're calling for at least two,
Okay.
maybe.
Yeah.
So I do think that, within the year, maybe we'll get to lower sixes.
Hmm.
But that's why we were saying, the buy down, that's the way to buy a house right now to make
Yeah.
it affordable.
Yeah. No, I get that. I get that. So, what do you feel like is currently influencing the mortgage rates the most? Because I know you just mentioned it. Just so
You
that
know,
people understand, because it's so confusing, when you hear things on the news.
so a lot of times you hear, well, the Fed's going to cut. The
Yeah.
Fed's going to cut. Well, when they cut the Fed fund rate,
Yeah.
which is that's the bank's overnight lending rate. It's
Yes.
not really your mortgage rate. Your mortgage rates are tied to like your 10-year treasury.
Yeah.
So it has an indirect impact on interest rates. So we still want them to cut the
Hmm.
interest rates
Hmm.
because if they cut the Fed fund, we do feel like we're going to have a lower interest rate on with mortgages. We think the
Yeah.
bond will respond favorably,
Yeah.
but that really is kind of the one thing that I keep hearing from people is I heard the rates were cut. No,
Yeah.
they weren't. They actually went up, but
Yeah.
they can react in an opposite direction. But I think that we're on pace to where if they'll cut two or three times this year, we'll start seeing them come down.
Yeah. No, that definitely makes sense. And that's always the biggest question that everyone asks me. They're like, wait, the rates, the Fed's cut the rates. The, what's the rate at? I'm like, it hasn't dropped. Typically that's
Don't
later
know.
on. It doesn't really drop the same way. But that's one of the reasons why I was so happy that you were on today and we could kind of hit, hit that on the head just because I get that question a lot. How do you expect rates to move in the next coming months or so on? Because I know you mentioned that you said maybe a couple times. I guess a lot of that has to do with the report that comes out tomorrow.
It
Is that what
does.
you're thinking?
Tomorrow's PCE. It's just one more report that kind of can shake the market up.
Yeah.
Um, I think that they'll probably wait and we might see them cut in the spring and then another one maybe in the summer. So I
Okay.
think we'll probably be sitting here in this six land
Yeah.
all during the spring unless something crazy happens in the world. That
Yeah.
does impact. market, but
Yeah.
let's hope we don't have any crazy. Let's just hope that it just
Yeah. Yeah.
stays mellow.
Yeah. I agree with you. I agree with you because, yeah, because if anything crazy happens, I mean, it just gets even crazier. Um,
Yeah.
so with, folks that are thinking about buying, and with the rates as where they are, what are the biggest benefits of buying now rather than waiting?
I mean, I think you see this probably more than I
Yep.
do. Right now,
Yep.
you're probably finding less competition, right? So you're going to be able to go in, purchase a home,
Yep.
hopefully for a decent deal,
Yes.
and it's not so competitive. So you could actually go in and have an FHA or a VA or a USDA approval letter
Yeah.
and get your offer accepted as soon as it starts to pick up, because I'm already starting to hear about like multiple offers, multiple
Yes.
offers. So
Yeah.
that's starting to come back. Multiple offers means competition, which
Yep.
means that the best offer wins. And it
Yes.
does not mean that, they're always going to accept the highest price. Sometimes they look at it and they say, you've got an FHA or a VA, which is a government loan.
Yeah.
And, they look at this conventional offer and maybe it's $5,000 less, but they don't want to have to deal with any of the restrictions and things that you
Yeah.
may have to deal with the government financing. So it's the perfect time for first time home buyers to get out there, make offers, get a decent deal on a house,
Yeah.
and then refinance in 6 to 12 months when the rates come down. But you will have your house.
Yeah. 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 Definitely. Definitely. And I agree with that too, because it is multiple offers for some homes, but it's a hit or a miss with that. So you can still get a great house. And you're right. I mean, I am seeing FHA, VA loans taken more than, I mean, sellers are looking at them in,
Yeah. Oh yeah.
so definitely, I definitely agree with you because I think I've had a couple buyers and they've done pretty well lately. So if rates drop in the future, what should homeowners know about refinancing? We can kind of jump into that and then we'll jump into the 2-1 buy down as well.
Yeah. So when refinancing, typically if you wait about 6 to 12 months,
Yeah.
you're going to be able to refinance.
Hmm.
12 months, that means that we go off of your actual new appraised value.
Yes.
If you refinance in 6 months, we're going to go off of your original acquisition cost. So what did you buy
Okay.
the home for?
Okay.
But if it's just a refinance and you're wanting to lower your interest rates, 6 months, the rates drop into the fives, you come back, we actually come in, it's another little application. You may or may not need an appraisal. Sometimes
Yeah.
that's waived. Do
Yeah.
not need all the inspections, right?
Yeah.
And we're able to just lower your rate. You go to closing again at the attorney's office,
Yeah.
and then they'll re-record, and then you start making your lower mortgage payment.
Okay. Okay.
So it's a mini mortgage kind of.
Okay. So what's the benefit? Because you were talking about the 6 month to 12 month difference, is there any benefit for going, at 6 months versus 12?
6 months just means you're going to start saving sooner.
Okay.
12 months means that, let's say you're in a situation where you're paying private mortgage insurance,
Mhm.
right?
Yeah.
You
PMI.
weren't able to put down 20%,
Mhm.
but in a year, you've gained a lot of equity. You've done this and that to your home. So now you know it's worth a lot more.
Yeah.
If you could go off of that new appraised value
Yeah.
that factors in all of those upgrades, now you may be able to remove private mortgage insurance.
Okay.
So that's the big benefit between the
Yeah.
two.
Yeah. Yeah, definitely. Well, I just figured I'd ask because I know a lot of people will, they'll watch this video and they'll be like, okay, well, what's the difference? So I definitely
Yeah.
wanted
Oh
to
yeah.
hit that
That's a
out.
good question.
Yeah, yeah, definitely. So with refinancing, what kind of fees is like a seller, not a seller, but a homeowner gonna be paying? I mean, what does it typically cost and what
So
kind of
for a refinance,
Mhm.
you are going to typically have to recollect your escrow for your taxes and your homeowner's insurance, right? So your property taxes, your homeowner's insurance, you probably have an escrow account now.
Yep.
If you go on and decide you want to pay that yourself, you can. But if you have it escrowed, then you're going to have to probably set that back up.
Yeah.
You will get that money back from your current mortgage provider. They will
Mhm.
send you a check for whatever the amount is that's sitting in your escrow account. You do have to pay for your attorney fees again.
Yes.
You may have to pay for an appraisal.
Mhm.
So I would say on average, maybe 3 to 4,500, somewhere in that range
Yeah.
for a refinance. So it's not too bad. And most people just, because the rates drop so low,
Yeah.
most people just roll that right back into their mortgage. You don't really pay any cash out of pocket.
Yeah. Well, that's good to know. And that's great.
Yeah.
Yeah, definitely. Because people ask me that as well. And I want to give them the worst case scenario. Well, you may have to put out money, but definitely if they can roll it into it, that sounds great. So another question, how would a homeowner know if it's a good time for them to refinance? Is it something that you guys kind of look at with them and it help them decide?
With my team,
Yeah.
we literally keep a running tally. So I have
Hmm.
kind of a strike rate list. So
Hmm.
once my clients, let's say that somebody closes at 6.5 and the rates go to 5.5.
Yeah.
Once it gets to that 5.5 threshold, I'm going to reach out and say, okay, we need to start the process.
Hmm.
Maybe the rates are continuing to go down. We don't necessarily have to lock in, but let's go on and get your application started so
Yeah.
that when the rates do bottom out, we can lock you in and close.
Okay.
So
Okay. That makes sense. So, and that kind of goes into my next question. Do you guys have any mortgage products that are strategies? You said you have a list. Is there, are there any products or strategies that, a homeowner can kind of just pay attention to or, that would help them to
I mean, the
make
main
sure they
thing is
don't
if
miss it?
I would just pay attention to the interest rates. Like,
Yeah.
I mean, pay attention to, could say the news, but the media sometimes gets it wrong.
Yeah.
I like for my clients just to reach out. I'm constantly communicating with them too. So
Yeah.
once a client closes, then I'm still going to be reaching back out and saying, hey, the interest rates are dropping. Hey, the interest
Yeah.
rates are dropping. We may need to have a discussion. And then when it does hit that strike rate, I'm going to call you and say, we do
Okay.
need to have a discussion.
Okay.
Like
Great.
it's time.
Yeah, yeah, that makes sense. And I'm so happy you mentioned that because I have a lot of homeowners that like we've closed on deals with together and they'll
Yes.
actually ask me, they're like, well, how do I know? And I'm like, she'll reach out.
Oh
But
yeah.
yeah, I figured you were. And so I wanted to make sure that, if somebody's watching this, they hear it.
Yes.
Yeah.
I will call you. You
Yeah,
will get
yeah.
refinanced. We do not want you to miss it.
Yeah, definitely. Okay, so let's jump into first-time home buyers. How can they navigate this market? And then we can talk about the 2-1 buy downs and maybe how that helps them. What is the best way for them to navigate the market with the rates at where they are?
With a first time home buyer,
Yeah.
I mean, I think one thing you can do is go on and get yourself set up now.
Yeah.
I like for clients to go on and reach out to me now,
Mhm.
even if you're not buying until this summer,
Yeah.
right? Let's go on and look at your credit. Let's look at your savings.
Yeah.
Let's make sure that you're you're on the right path. We want to make sure that you don't have a lot of debts that you need to pay down so that your credit score can come up. We want
Yeah.
to make sure that you're saving enough. We want to make sure that you're paying things off if that's necessary. All
Yeah.
those things are going to be surprises to you if you wait until, hey, I'm ready to buy a house within the
Yeah.
next 30 to 60 days. If you find out now, we do a soft inquiry on your credit. It
Yeah.
does not hurt your credit score.
Yeah.
So it's really a worthwhile thing to go on, invest the time, do a quick application. Let's have a conversation, prepare, be ready so that when the time's right, you can strike.
Yeah.
Um, I think that's the biggest thing is just credit score, savings, or knowing what assistance programs are available and what you qualify for so that
Yeah.
you can count on those.
Yeah. And knowing where your credit score is at for those programs.
Where your credit score's at.
Well, this is
Yes.
huge because I mean that's one of the number one questions I ask buyers when they call me is I'm like, what's your credit score at? Because it helps me guide them to help, send them to you to get pre-approved because I
But
can.
they need to remember like credit karma is not the same model that mortgage lenders use. We
Yep.
use FICO too. And so if you're looking at Credit Karma and it says that your credit score is a 650, when I pull your credit, it may say that your credit score is like a 600.
Yeah.
It can be that big of a difference.
Yeah.
So reach out to a lender, reach out to me. I will run your credit soft inquiry. That's the key. It's not going to hurt your credit.
Yep.
And that way you know what your mortgage credit score is.
Yeah, yeah, definitely. And that's funny that you were talking about that. That's one of the things I mentioned to all the buyers. I'm like, okay, where did you find that out?
Yeah.
Yeah. And
Credit Karma.
I always tell them, I'm like, so there might be a difference. So I'd still reach out, to my lenders and see what your credit score actually is and see if you can qualify for these programs and if we need to work on some things. So I'm glad that
Yes.
we talked about that. Okay, so let's move on to 2-1 buy downs. Can you explain what they are and how they work? Because I know a lot of people out there are curious.
So a 2-1 buy down it's a strategy where
Mhm.
if let's just say that you know that you're going to have your car loan paid off in the next 2 years,
Yeah.
or you're going to have a different position in the next two years where you're going to
Mhm.
have a raise.
Yeah.
So it's a strategy to where you can go on and buy a house now. And
Hmm.
if the interest rate is 6.5 today,
Hmm.
you can buy your rate down so that year one, your payment is at 4.5.
Yep.
So it saves you a ton. And
Hmm.
then year two, you're at 5.5. So it's kind of this that you're scaling up, right? But you're getting ready, but
Yep.
it gives you time to pay things off, pay things down,
Yep.
get in your new position, whatever that looks like. It allows you to kind of take a stair step approach to that new payment. The
Yeah.
cost of the buy down would be negotiated
Okay.
by your agent, by
Yeah.
Carrie. She
Yeah.
would go in, approach the sellers and say, hey, can we get, a $7,000 credit for a 2-1 buy down?
Mhm.
And if they say yes, Carrie writes that into the contract, and
Yep.
then they cover the cost of it.
Hmm.
So it really is a unique strategy. It's something that a lot of people are doing right now just to
Hmm.
make their payments a little more affordable.
Yeah, yeah. And who do you find benefits the most from a 2-1 buy down? Do you think just first time home buyers, or I feel like
No,
they would benefit, but I think
I think
everyone
first time
can.
home buyers do, but then
Yeah.
sometimes I find my move up buyers like that as well. Because,
Mhm.
when you first move into a house,
Yeah.
you have all kinds of expenses that you don't anticipate,
Yeah.
furniture and paint and just lots of stuff. So
Yeah.
it gives them that initial low payment so that they can
Yep.
do all the things they want to do to the house
Yeah.
and then step up to the higher payment.
Yeah.
And the trick to a 2-1 buy down is if the rates drop, right, in the next 2 years, right?
Yep.
6, 12 months,
Yeah.
go in, we refinance any of the money that's sitting in that 2-1 buy down account. It sits in an escrow account
Yeah.
just for your buy down. That money comes back to you at the closing of your
Oh,
refinance
wow.
as a principal reduction. So the money is not lost. It's not gone. It will come
Yeah.
back to you if you don't use it and you're able to refinance prior to that 2-year period.
That's amazing.
Yeah.
Amazing. And I feel like so beneficial. Okay, so here's another question. We've kind of talked about it, but we haven't. With a 2-1 buy down, when you're comparing it to negotiating a lower price on the house, what do you feel like is, what's your thoughts on that? Because some folks are like, well, just lower the price of the house. Or do you feel like they're more beneficial getting the 2-1 buy down?
It depends on what your budget is.
Yeah.
Some people would rather just secure the house at a lower price.
Yeah.
That's what they're concerned about.
Yeah.
Some people are secure, they're more concerned about, how much cash they need to bring to closing.
Hmm.
Some people are much more payment sensitive. And
Yeah.
so if you're payment sensitive, then a 2-1 buy down is perfect for you
Yeah.
because it allows you to get into the house at a much more affordable payment for you and gradually increase the payment so that you can be ready, but it
Yeah.
gives you that year to get to that point where you're like, okay, now my payment's going to this.
Yep.
And it gives you time for the interest rates to drop and
Yep.
for you to be able to come in and refinance.
Oh yeah, definitely, definitely. I agree. I love buy downs. So I
Yeah.
agree with you. So with sellers out there, offering a 2-1 buy down, um, explain the benefits that you feel that there are for sellers with 2-1 buy downs and offering those because I like to
You're
bring them up to a lot of my sellers, but it's great to have a lender talk about them and, tell us what they feel like is the biggest benefits for the seller.
it's one of those things where you can say rate as low as
Yeah.
4.5, right? I
Yeah.
mean, you're willing to do a buy down. So if
Yeah.
the rate's 6.5, you're offering these people 4.5. That makes your house more appealing than others because you're saying up front,
Yep.
here's the price, here's what I'm willing to do. And a buy down can be a little bit expensive. I mean,
Yeah.
8, 10, $12,000, depending on the price of the home.
Yeah.
That's a lot of money. But
Yeah.
you're going on and saying up front, hey, if you pay this price, I'm
Mhm.
willing to do this. And you're saying, hey, I care about you. I'm willing to invest in your payments for the future so that you can make this home more cost effective for you and for your budget. So
Yeah.
I think it's a huge win across
Yeah.
the board.
I do too. I do too. And that's I always bring them up to sellers. I'm like, because, the marketing. I mean, because we do
Yes.
have so many first-time home buyers and buyers out there that are kind of sitting on the fence and that are so payment sensitive. Because, we were talking about that earlier. I mean, it's just the payment can be high and the affordability is difficult with the higher interest rates. So
Yep.
I think this could make a lot of buyers jump back in or be interested in your home, with a 2-1 buy down if you're offering it. So I think it's a huge benefit.
I think so
Um,
too.
yeah, definitely. Okay, so one of my last questions are when a buyer is considering or deciding if a 2-1 buy down is the right choice, what are the things that they should look at?
On a buy down,
Yeah.
I would say you want to talk to your lender, right? I
Okay.
mean, I always do like a full breakdown. So I can say, okay, here's the cost
Yeah.
of this. Here's the payment each year. So you know
Mhm.
what you're looking at.
Yeah.
Is that important? And then we can go back and we can reverse it and say, okay, so if you paid less,
Mhm.
got rid of the buy down and you just took this price and this, interest rate, the
Yeah.
higher rate, then
Yeah.
this is your payment. Which do you prefer?
Yeah.
I mean, is the plan to stay in the house for long term,
Yeah.
7, 12 years? Because you're going to be able to recapture that equity. If
Yeah.
your plan is to stay in the house for 2 years, I don't know. Maybe you want to take the lower price.
Yeah.
So
Yeah.
it's all about having the right conversations with lenders and your real estate agent.
Yeah. I
You need
definitely
to
agree.
have those talks.
Yeah. Yeah, for sure. Okay. So one last question I had as we were talking, I was thinking about it. I was like, oh, okay. So let's talk about this. So with 2-1 buy downs or refinancing, what do people need to consider? Because you were just mentioning about how long you're thinking about staying in the house. What do they need to consider to make these products worthwhile for them? Is there, because like I always ask them, it's like, well, how long are you going to stay in the house? But coming from a lender, what do you feel like is the best, outcome? I mean, or time frame that they need to think about, which,
I mean, on a buy down, yeah, I
mhm,
would say that, if the rates come down in the
mhm.
next 12 months, I would definitely go on a refinance,
Yeah,
take the lower rate, and remember that money's sitting in that account. So maybe the price was a little bit inflated because they factored in
yeah,
X amount and for the buy down
yeah,
cost in the purchase price. Well, now you get that back because
yeah,
that money is going to reduce your principal balance.
yeah.
So, I mean, that's a win.
Yeah.
Reduce your principal balance. It can pay for any of those closing costs that we were just talking about.
Yeah.
I mean, so I would say, in about 6 to 12 months, I would be definitely connecting with my lender and saying, hey, what do the rates look like? Is
Yeah.
it time? Is it time?
Yeah.
Just to make sure you don't miss it.
Yeah, for sure. Well, as with like just a refinance, if somebody's thinking about refinancing, um, what's your thoughts? Like, do you ask them, and what's your opinion about that? Like, Do you ask them how long they're planning on staying in the house? Does the refinance make sense? Because it is costing you a little bit.
It does. So, on average, if you're refinancing,
Hmm.
you're going to save probably $200 to $300 a month
Yeah.
minimum. So when you divide that into the cost, the closing cost,
Yep.
you can recoup that in less than 12 months
Okay.
on average,
Yeah.
right?
Yeah.
So as long as you're going to stay in the house for a couple of years and that's just kind of your plan, I would
Yeah.
always say go on and refinance
Okay.
because plans don't always work out and you end
Yep.
up staying in the house and then you miss the boat because you didn't
Yep.
refinance, missed out on that lower rate, and now you're
Yep.
stuck in the
Yeah.
sixes and everybody else has a rate in the fours.
Yeah, yeah, definitely, definitely. Well, I'm glad that I asked you that because that is a big question that people always ask me. They're like, "Well, should I refinance? I don't know how long I'm going to stay. What do you think?" And I'm like, "Well, you need to talk to a lender." But my thoughts are you probably need to stay at least a year.
Yeah, you
So
do. You do.
yeah, yeah,
1 year is
definitely.
the magic number, but it does
Yeah,
it does come down to the math equation.
yeah, 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 definitely. Well, I am so excited that you came on today and we chatted about all these topics. Um, the market. We'll see how things go. Everything, we just don't know. Every day is a different day. And
Don't know.
yeah,
I think it's gonna get hot. I think everybody
yeah,
should get ready.
I agree with you. I definitely agree with you. Yeah. And you'll have to come on again and we'll chat about where the market's at again
I
because
will.
this is
Let's hope
changing.
we'll have good news next time.
I know.
Think fives, fives.
Yeah. That's my goal too. I mean, I think it's
Yeah.
so amazing if we were in the five soon because it would help
Yeah.
so many buyers, you
It's
know?
a big savings.
Yeah, huge.
Huge.
I think it's gigantic. I mean,
Yeah.
these sixes and sevens kick a lot of buyers out, which I hate it.
I do
So
too.
yeah, but there's going to be change. Things are going to drop. I have a feeling. So that's my gut. My gut's telling me that. But anyways, well, thank you so, so much again, Ashley, for coming on. Ashley McKenzie Sharpe with Highland Mortgage. I will have all her information again in the comments, and you can always reach out to me and I can get you connected with Ashley, who's amazing. But thank you again, Ashley, and I hope you
Thank
have
you.
a fabulous weekend and week.
Sure.
Yeah, and I will talk with you soon.
All right. Bye, girl.